Dear students, we will do module 88, deductions from gross total income, module 88, section 80G, part 2. See, part 1 I have given the theoretical explanation. Part 2 I will give two problems we will work out. So we will do the first problem. Mr. H has an income of rupees 5,60,000 during the year 24-25 and gave the following donations during the previous year 24-25 to Jammu and Kashmir Chief Minister's Flood Relief Fund 10,000. We have to remember that there is no donation like this, approved donation. Second is to an approved fund for rural development 15,000. Next is to a notified national laboratory engaged in scientific research 20,000. Now compute his total income under the new and old tax regimes if his total income consists of 3 lakhs under the head profits and gains, or he does not have any income under the head profits and gains. Now first we will do with the old tax regime. Business profit is 3 lakhs. Business profit 3 lakhs. Now less expenses allowed. Less expenses allowed. Less expenses allowed. Scientific research. Scientific research. It is not allowed. Amount to national laboratory. National laboratory. This is also not allowed. National laboratory also not allowed. Next is amount given for an approved fund set up for rural development. Under the old regime, it is allowed rural development 15,000. So when you reduce this value, you will get business profit as 2,85,000. So this is the business income. This is the business income. Second is, now we have income from other sources. Income from other sources. So this is the second point. This is business income. That is the first point. Income from other sources. The value is given 2,60,000. 2,60,000. Now gross total income 5,45,000. Now I told you Kashmir Chief Minister's Flood Relief Fund is not allowed as per 80G. That item is not listed. So the taxable income, less deductions under section 80G nil, because it's a disallowed item. So taxable income 5,45,000. 5,45,000. Now let us see under the new regime. New regime, you have to see that business profit is same. So here you have to remember this rural development is also not allowed. So here business profit will become 3 lakhs. 3 lakhs. Now plus income from other sources 2,60,000. So your income will become 5,60,000. 5,60,000. Now total income will come 5,60,000 taxable income, because 80G deduction is not there. So this problem why I have worked out is to compare between old tax regime and the new tax regime. Now table, this two computations we have completed. Now we will do another problem, problem 2. The gross total income of Mr. A amounted to 6 lakhs for the previous year ending 31/3/25. Mrs. A amounted to 6 lakhs for the previous year previous year ending 31/3/25. She made the following donations: to the Gujarat Earthquake Relief Fund 40,000, to Africa Public Contributions Fund 10,000, to approved educational institutions 15,000, to approved temples 35,000, to clothes distributed to the poor 5,000. This is not allowed because donations in kind are not allowed. Next is to the municipal corporation for family planning. If this item is there, this is with limit 100% qualifying amount. So here if this item is there, or the sports item, sports donation is there, then it will change the complete computation. So we have to remember this computation is important when the family planning item is involved. To help the poor and needy in cash 20,000. That is also not allowed. donation to a particular political party, to a particular person, and cash payment exceeding 2000, it's disallowed. To clean Ganga fund, 20,000. Compute the amount of deduction admissible under section 80G for the assessment year 25-26 under the old tax regime. Why I have mentioned old tax regime? It is not allowed. 80G deduction is not allowed under the new tax regime. So here you have to remember, it's very simple computation. We have the two list. One is without limit donations. Three items are there. Gujarat Earthquake Relief Fund. Earthquake Relief Fund. The value is 40,000. This is 100% deduction. Only Prime Minister's Drought Relief Fund is without limit 50%. All the items coming here are 100%. So we can take that. Then the Africa Fund. Africa Fund value is 10,000. 10,000. Next is Clean Ganga Project. Clean Ganga Project. Clean Ganga Project value is 20,000. 20,000. Now, without limit, the total deduction is 70,000. Next item what we have to do? With limit. Three items are there. That is approved temple. Approved temple. Value is 35,000. Value is 35,000. Approved educational institutions. Educational institutions 15,000 and family planning 20,000. So here also you will get 70,000. This is also 70,000. This is also 70,000. Now the next step, 4 steps are there in computation. First step is you have to calculate the adjusted GTI. Adjusted GTI is equal to the GTI minus long-term capital gain minus short-term capital gain falling under AAA minus deductions under section 80C to 80U. Here none of the items are there, so your adjusted GTI is 6 lakhs itself. Second step, identify the items having with limit and without limit. That we have already calculated, both the values are 70,000 each. Step 3, determine the qualifying amount. How you calculate the qualifying amount? 10% of the adjusted GTI. Your adjusted GTI is 6 lakhs. 10% is 60,000 or 70,000, whichever is less. 70% with limit donations 70,000, whichever is less. So this is your qualifying amount. Now qualifying amount, this item will get 100% exemption. So you have to reduce 60 family planning full value we can get. Now the remaining 2 items you will get only 50%. Now 50% meaning in the 60,000 already you have allotted 20,000. Balance is 40,000. So 40,000 into 50 by 100. So total 20,000. So total deductions 80G, total deduction is 40, 80, 1,10,000. 1,10,000. One is 50, 70, 90, 20. 1,10,000. This is very simple computation. We will do one more or 2 more modules of computation. Then it will be very clear to you. So this is what I wanted to explain in this module. Happy learning. Thank you.